Hi, and welcome to the Market Week in Review for the week ending 22nd of August, 2025. I'm Alex Curzley. I'm a senior portfolio manager based out of Sydney. And there's three things to really go through this week. I think the first is on the global economy. We've got the flash PMIs. We'll go through that. The second is what is happening in China. We've got the latest data for the month of July. And then finally, what is going on in equity markets and what is happening with Jackson Hole. So if we start with the global economy, so this week we got the flash PMIs, or the purchasing manager indices, for the US, the UK, Europe, and Japan. And generally they were a bit better than expected. So we've seen a bit of a pickup relative to what expectations had been. And that was pretty broad-based across regions. So the global economy, there are some headwinds around tariffs, but broadly, those numbers were a bit better than expected. In converse, though, we got the latest numbers out of China, and the general story there was quite soft. So we got the industrial production, retail sales, and fixed asset investment last week on Friday, and pretty much a miss across all of them, and particularly the retail sales side. The consumer is still very cautious and is not spending a great deal there. There is a number of policies that have been announced from the Chinese government around potential consumer loan subsidies. Those things we think are fairly minor in terms of the impact they will have, and we're still looking at this sub-trend growth for China over the next 12 months. On the equity market, so we saw US equities this week. We're recording this as of Thursday close. They were off a little bit, fairly modest. But what we've seen is a broadening out of performance. So we've seen this week equal weight S&P 500 has outperformed the market cap weighted. So the median company has been outperforming the market cap. We've seen Russell 2000, so small cap, has outperformed large cap, and even EFI, so non-US developed markets, have outperformed. So that broadening out that people have been talking about and we are broadly positioned for, we saw a glimpse of that this week, and I think there's still some room for that to continue to run. The final thing on Jackson Hole, so we have the big economic central bank conference this week at Jackson Hole. The who's who of central bankers will be there, and the big focus is Jerome Powell's speech, which will be on Friday US time. We don't expect a huge amount to come from that in terms of direct guidance for what is going to happen in September at the Fed meeting, but we think that more broadly, September is likely as an interest rate cut. There's a couple of the reasons. The economy is holding up, but it's still cooling. We see clear signs of that. We saw the payrolls report last month that saw a meaningful surprise to the downside. And the other thing that's really important to note is the Fed is starting from a point of restrictive policy. So they are currently putting their foot on the brake on the economy. And so over the next 12 months, given that and given the fact that the economy is in a slowdown phase, we think it's appropriate for them to bring interest rates back down to a more normal level, which we estimate is about 3.25%. And so we think September is quite likely for them to restart that interest rate cutting cycle and gradually move back down towards there. So with that, really appreciate your time. Thanks for listening, and we look forward to speaking to you again soon. Bye.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.